Well, our next guest says that the market is largely ignoring a red flag in Friday's jobs report. It's among the three main narratives he's seeing emerging following President Trump's firing of the BLS chief last week. First, argues the decision undermines institutional integrity. A second, focusing on BLS's data compilation challenges and how they've become increasingly problematic. And a third, saying data revisions provide valuable insights, and the big revisions down could be a prelude to bigger problems ahead. So joining us now to elaborate is Mohamed El-Erian. He is former PIMCO CEO and chief economic advisor at Allianz. I mean, you make some three big points. I guess let's start, Mohamed, on the firing of the BLS chief. We were speaking about the jobs report, but you see a number of reasons why this is problematic. Dive into some of those for us.
Yeah, this shouldn't be a political move. This is an apolitical institution. It is true that it's had persistent problem on data collection. The response rate has come down. There hasn't been much incorporation of the higher frequency data that was so valuable to everybody during the pandemic. And then clearly there's a problem of methodology. The estimation, until you get more data, seems to be off. So there are problems on the data collection and the data estimation, but you should not undermine the institutional integrity of the BLS.
And so you're saying that firing the head of BLS does that because it's a signal. It's saying, hey, everything you're doing isn't right?
It's being interpreted as a signal as I don't like what you've released in terms of data, and therefore I'm going to fire you.
I see.
Now, Kevin Hassett said yesterday that the president wants someone that he can trust there. And other people have noted that it's actually very difficult for the head of the institution to change the way the data is compiled because so many people are involved. So you wonder how much is gained, and you worry about what it does to institutional integrity.
And so can you talk to us then about the revisions? We get them all the time. And it's funny, Steve Leisman, who is our senior economics reporter, and I often look at things like retail sales data, which, again, a government report, and I look at what the retailers are saying, and they often don't agree, and I've always wondered why. And Steve and I have just come to the conclusion it's a different way that data is collected when it's done by the government. In some cases, it's surveys or estimations, as opposed to individual retailers reporting, which, of course, is individual and not aggregated. So I guess when we're looking at the data itself and the revisions and what we've got so far and what we know, how do we use it to our advantage if we know that it is to some degree imperfect?
So the bottom-up data that you and I look at, those numbers are particularly valuable at turning points. If you remember, go back to 2021, the companies were all saying we are seeing higher costs and we have pricing power. But the top-down data wasn't picking up the inflationary impulse until it was too late. Similarly, now, the bottom-up data has been signaling weakness, not recession, but an economy that's weakening. We've seen that in terms of pricing power for those who sell to lower-income households. We've seen it in terms of net income growth away from the top 10. It has struggled. We've seen what has happened to employment in the public sector. So for those of us who look at micro indicators, they were flashing yellow, but the big data wasn't flashing yellow until we've got these massive revisions. And these are massive revisions. We're down to job creation that we haven't seen for 4 years in terms of 3-month moving averages. So I think the macro data is finally catching up with the micro data, which is now, of course, making everybody change their mind about what the Fed should have done last week.
Mohamed, at the same time, you said you think that Fed Chair Powell should resign, which President Trump would want to protect the independence of the Fed. But you're saying that Trump shouldn't have fired the head of BLS because it threatens the independence of that data collecting and distributing branch of government. So does this shift your view at all on whether Powell should resign? Because it seems that perhaps the president just wants to fire whoever's not giving him the numbers he wants.
That's a great question, John. So the common theme here is preserving the institutional integrity. That is so important. What differentiates us from other countries are the strength of our institutions. In one case, he fired someone. I've never said he should fire Powell, but I do think that with Powell's term running out in May, and he will be a lame duck way before, we may get an announcement as soon as this week as who the next Fed chair is. With him stepping down and with his presence until then, being such a magnet for political attacks that are widening. It's not just the president. You have Johnson in Congress. You have Secretary Bessent. The attacks on the Fed are expanding and deepening. And I really worry about the financial integrity of the Fed, much more than the financial integrity of the BLS. If we lose the institutional integrity of the Fed, we're going to step back in a major way in terms of good economic outcomes.